Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It is a day after the budget. We've been analyzing. There are a lot of new provisions that we've been talking about as well. But for now, markets are lower, something that we expected today because of the global setup. 130 points lower on the Nifty, but mid-caps are doing well, Vivek.
Mid-caps and small caps are doing well, and that sets the tone for our show as well. Quite a lot lined up. Let's start off with the top headlines. Markets move to the day's lowest point. Financial services and private banks drag, while oil and gas along with pharma clock gains. Midcaps outperform.
Realty sector stocks bounce back even as the street remains divided on indexation announcement, while the finance secretary suggests withdrawal of indexation along with a tax cut should be positive. Some in industry differ. The impact is expected to be positive for some, negative for others.
United Spirits climbs more than 5% in trade after delivering a strong set of numbers. Premiumization, cost control and contained input costs boost margins.
Johnson Controls, Hitachi Air Conditioning surges in trade as Bosch Group is all set to acquire residential and light commercial HVAC business from JCI Hitachi JV. Transaction valued at $8.1 billion. Okay, all right, those are the top headlines. Let's quickly take a look at the Nifty, down 137 points. The Bank Nifty is down 600 points. So largely a red-looking market for us today, but the mid-caps, they have made a comeback. That index is up 522 points. The small-cap index is doing well, and a lot of individual moves. We've been seeing it on the back of results. We've been seeing on the back of budget announcements as well, and that continues to be the case. But we do have a lot of managements lined up on the show as well today.
A lot of managements lined up. Before we go to that, we also want to touch upon the individual stocks that are moving around. Hormaz is at the wall. Hormaz, over to you for the mid-cap movers.
Red on the benchmarks, green on the broader market. Seems like a normal day as we speak, but then there are plenty of movers, mostly on the gaining side in the broader markets, as evident from the advanced decline as well. But BSE is leading the pack. The stock was up yesterday, came off the highs of the day, but now has seen a bit of a rebound now, 8.5% higher as we speak. Castrol is having a good day for itself, 265 now on the stock, almost 8% on Castrol as well. MCX is having a good day, and Suzlon building on the gains after its quarterly results, another 5% now, upper circuit, 60 rupees on the stock for Suzlon. A sector that has been a subject of much debate since yesterday, real estate. The index sold off yesterday, seeing a bit of a rebound today. Prestige, Sobha, Oberoi seeing gains between 3 to 5%. But the one sector that has been doing well since yesterday are the shrimp feed stocks, Avanti Feeds, Waterbase, Apex Frozen, all of them gaining nearly 20% after some announcements, the positive announcements that were made in the budget yesterday. Plenty of earnings reactions as well, and Thyrocare is the one 15% higher now after its results. Federal Bank was trading in the red earlier, but once the numbers were out, the stock now is up 2% off the lows of the day. United Spirits crossing 1 lakh crore in market cap today, so 5% higher there, and Torrent Pharma having a negative reaction. Some stocks doing well on the back of volumes, and they'll come up on your screen. Quest Corp, another budget-related news. Borosil Renewables 8%, and MMTC is up now 20% on very strong volumes. And lastly, some stocks that are underperforming in today's trading session, and they'll come up on your screen. Some of the stocks that include the likes of Bandhan Bank, Godrej Consumer, FMCG, one of the stocks in the FMCG pack not doing well, and Sundaram Finance not having a good day in today's session. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for that list. A lot of stocks on our radar. One of them is Sharda Cropchem. Recently reported their Q1 numbers. The company reported good set. This has come in as a recovery after a few quarters of weak performance. Revenue surged 23% on a YOY basis. This time around, the company's reported a profit versus a loss last year. To discuss this and more, we are joined by R.V. Bubna, Chairman and Managing Director at Sharda Cropchem. Mr. Bubna, good afternoon, sir. Thank you so much for joining us. Well, you did indicate that prices have bottomed out in the last conversation that we had. Can you give us a sense of how much did prices rise by in Q1? What was the volume growth that you saw? And if that trend has continued in Q2 as well?
Madam, the prices have not risen much, but the volume has grown. Volume has grown by almost 41%.
Okay.
Compared to the same quarter last year.
Okay. So if you can give us a sense of going forward, the growth, will that be led by volume growth, or are you seeing a similar pricing growth as well?
Madam, there will be both pricing growth as well as volume growth. Pricing should grow better in the second and third and fourth quarters, particularly third and fourth quarters.
Okay, sir. So now talking about the AgChem business itself, could you give us a sense of how the EBIT margin over there panned out? It appears to have kind of slowed down. Was this because of higher rebates, discounts that were given, and will that reverse in the coming quarters?
Sir, there was some rebates given, but the main reason was excessive production in China and huge stocks that the manufacturers as well as the distributors and intermediates had collected. That led to very big collapse in the prices last year. Now there's a small increase in the prices, but the prices have stabilized instead of going continuously down. And I feel from here, the prices should start looking up, but the process will be slow. Not that fast as it was in the case of dropping.
Okay. I also wanted to understand what happens with the balance sheet. You have seen an improvement in working capital days. You're sitting on a cash of around 650 crore rupees as well. Is there any plan to do any acquisitions globally? Is that something on the cards, or what is the plan with the cash that you have in your books?
Madam, we don't have any plan of acquisition or any such things. We will reduce our working capital days, and we will pay our suppliers punctually on time, or sometimes even early, and try to get some cash discount if we can. And also make some investments into mutual funds or and fixed deposit schemes.
Okay, so I understood that you're taking advantage of the buoyancy in the equity market. So, if you could give us a guidance, you said that at this point of time, prices at least have definitely bottomed out. So you expect some recovery, maybe not at the same pace at which they declined last year. With that in mind, could you give us a sense of what is it that you're targeting in terms of volumes for FY25, the kind of pricing you expect, and if possible, if you could give us a guidance for top-line margins as well as profitability?
Sir, we are expecting the volume to grow by about 15 to 18%, and revenues will also grow in the same proportion. And our gross margins should be in the range of 30 to 35%.
Okay, 30 to 35%. And just for context, Sharda Cropchem has done gross margins of 29.2%. So from
EBITDA should be in the range of 15 to 18%.
15 to 18%, and that is the similar revenue growth that you're expecting as well. Got it. What are the current registrations in the pipeline, Mr. Bubna, and what kind of money would you require for those registrations? Because that would be a substantial sum, if I'm not mistaken.
See, we have about 2,900 and odd registrations in hand, and about 1,050 registrations in the pipeline.
Okay. And what kind of product approvals are you expecting this year itself? Will this growth also be led by any new product introductions that you would make?
Yes, there will be many. We are expecting more new registrations, and there will be new products for us, and that will help us to improve the margins.
Okay, so just a quick word as far as the demand outlook is concerned, both domestic as well as exports, and especially a word on how Europe operations are panning out.
Sir, the demand is constantly in the improvement. Our volumes have increased very happily and handsomely, and we feel that this trend should continue in the next 3 quarters.
Okay, all right. So after a lot of weakness that we've seen because of global agrochemical inventory destocking, now things are coming back on track. The stock price is higher by 5% as well. Thank you, Mr. Bubna, for joining us as always and giving us your take on what's happening with the industry and the company in specific as well. The stock actually has seen an uptick since the time we had this conversation. So that's the word coming in from Sharda Cropchem. We'll slip into a break now. Up next, management of Dodla Dairy will join us to discuss their Q1 numbers and the way forward. Stay tuned.
Welcome back. The next management on the channel is Dodla Dairy. It reported a strong set of Q1 numbers, margins expanded, value-added products saw growth of more than 21%. Going forward, the company is targeting a capacity of 20 lakh litres per day. We have Sunil Reddy, the managing director at the company, who joins us now. Good afternoon, sir. Thank you so much for joining us. The first question has to be the target that you've set, 20 lakh litres per day. When can we expect you to go ahead and reach this particular target?
We are anticipating to reach 20 lakh litres per day in the next couple of years. And thank you very much for giving me the opportunity for being on your channel.
Okay, all right. Mr. Dodla, good to have you on the show with us. It's a good set. We have seen this for you. We have seen this for the peers as well. Wanted to understand what have the procurement prices in Q2 been so far? Because this has been consistently increasing. How is it for you? How is it for the industry? And what is the outlook? Will it continue to increase?
Procurement prices will remain muted in the current quarter because earlier monsoons in the south of India has got the flush season coming in a bit early, and there is plenty of milk in the system at the moment. So we are looking at prices remaining steady state at least for the second quarter.
So it'll be around that 39.4 rupees per litre?
Yes, around the same prices.
Okay, let's now come to the value-added product segment. Number one, what is the growth that you're targeting in this particular segment, and what will it be as a percentage of your top line going forward?
The first quarter, we have achieved almost a 34% contribution from the value-added segment at a consolidated level. This has predominantly been done with the earlier statement that we are making of increasing our procurement. We are now trying to become more active in getting more procurement for ourselves in terms of having fresh milk available throughout the year for our liquid milk sales, because we're doing a bit of branding and marketing exercises and we want to keep it that way. As a consequence of that, we will also have a lot more of fat and powder to sell. So fat being sold in the form of consumer ghee and powder being sold as a form of B2B, this will drive our growth in terms of the value-added segment to be larger than it was in the earlier days. So we are looking at the 30 to 35% range of growing in this year.
Okay, so 35% of total sales is what you're expecting. Is that correct?
Yes. Between the 30 to 30.
What is the growth that you're expecting in this particular segment? You had indicated you're looking at mid-teens growth for value-added products. Will it be led by pricing? Will it be led by the newer products that you're introducing? So that would mean better volume growth here?
Yes, it will be also led by the newer products that we're introducing as the larger share of the fat produce that we are selling. And that's the reason we'll see the expansion coming in more of the value-added component.
Okay. Now, talking about the geographical mix that you have, you're largely present and a majority of your sales comes in from South, both Andhra Pradesh as well as Karnataka. So going forward, how do you see that revenue mix change?
That will maintain status quo. We're also pushing harder in terms of Telangana now, because Hyderabad being one of the markets that we're pushing for. And we've also been doing well in Tamil Nadu now, because our spread in Tamil Nadu is increasing after our acquisitions a couple of years ago that we did with a couple of dairies there. So we think we'll maintain our market shares in the existing markets, and also Tamil Nadu and Telangana will try to expand our market share.
Okay, so what is the current market share for you amongst private players right now? What is the overall market and the overall market as well? What is the trend that you're seeing here with the expansions that you're planning in states like Tamil Nadu as well?
We think that we will be maintaining a 4-5% market share in Tamil Nadu, which we want to increase it to the 6-7% as the overall market share. We have strong players in the market there, so it will be a battle that we'll keep fighting, but we will be growing at least by a percentage or two of market share in Tamil Nadu.
So that's Tamil Nadu. Generally in the industry, what is that number looking like for you?
Generally this year, because as we were saying earlier, the flushes come in earlier, there's plenty of milk in the system. We think we will be able to maintain a steady state of market shares. We won't have much of an increase, because normally when there is a huge flush, we find a lot of the unorganized sector coming in and offering product which will be cheaper. So volume growth will be a little muted compared to the earlier years, but it is a seasonal thing that happens in the dairy industry most of the time. When there's surplus, volume will get muted.
Would you be able to quantify, number one, the revenue, the margin, as well as the bottom line guidance that you can share for FY25?
So FY25, our revenue guidance will be similar as what we have seen in the first quarter, where we've been growing at the 10% in terms of the revenue growth, and the profitability growth will be in tandem, because as it's a game of once we have more milk in the system, cost of milk comes down, which will also expand our margins well, and also adding a bit of our value-added profile improving. We will maintain the same growth of that 15-20% in terms of the bottom line that we already have.
Okay, and margins at around 11.5%. Is that something that we can look at this year?
Around the numbers, around the double-digit numbers, definitely, ma'am.
Okay. Mr. Dodla, I wanted to understand your current distribution reach. What is the targeted expansion? Because you've increased your retail parlors to 598. You are talking about expansion in different states as well. What is the plan here? What kind of capex will you have to put in here?
More than the capex, we have undertaken a little more of expenditure on our branding side. We are now doing a little more of branding exercise and making our presence being availability rather than presence, saying availability to become more far-reaching. And also we have been pushing more product into the modern trade. So with all these three that we will be going into it, capex is not large on the front of marketing. It's only a bit of the freezer expenses that we factor in, or the refrigeration chain that we try to give it to the trade. And it will not be large. It will be a very small numbers of a few crores here and there, not a big number in terms of capex.
Okay, so last question from our end. How big can the Orga feed, which is the animal feed business, be as a percentage of the revenue going forward?
As a percentage of the revenue, it will still be small. We did around 80 crores. We're expecting it to almost double to become maybe 160 crores by the year end, if you look at it. Out of a gross revenue of maybe around close to 4,000, so it will hardly be 3-4% of the overall revenue.
Okay, Mr. Dodla, thank you so much for joining us today and giving us all those details. So the street liking the numbers, that's the word coming in from Dodla Dairy. We'll slip into a short break. We'll get you more on the markets and put focus on Thyrocare, which is buzzing in trade on the back of numbers. Stay tuned. Welcome back. You're still tuned. It is surging in trade on the back of a good set of Q1 numbers. Ekta is telling us more. Ekta.
Thanks for that. Well, yes, Thyrocare is in focus because of a good set of Q1 numbers. So the revenue is up. Profit at around 24 crores. Both the revenue and the margins, in fact, have come in at multi-quarter highs. Revenue is highest since Q2 of FY22 and margins highest since Q1 of FY3 as well. Now, the profit also is the highest that we've seen since Q2 FY22. Pathology revenue, which is bulk of the year on year, and it was a flattish Q on Q. Franchise revenue was up on year. Partnership revenue was up around 29%. D2C, which is direct to 16%. Patients were up around 9% to 4.1 million this quarter. Samples were up 13%. And the company's radiology revenue, which is a small part of the business, was also up around 15% to 13 crores. Overall strategy of the company continues to be a B2B service provider with affordability. It's trading at around 37 times FY25 PE and 31 to 32 times FY26 PE. So maybe there is some kind of upside as compared to valuations of other listed diagnostic companies.
Thank you so much for that, Ekta. Sharp mover in trade today. And amidst the recovery that you're seeing both in the Nifty as well as the Nifty Bank, that's all the time we have on this edition of Midcap Radar. Your stocks when we return.